We had a monetary policy committee meeting yesterday, May the 26th, 2021, and this is the customary press conference after that monetary policy committee meeting. The Governor of the Central Bank of Kenya, Dr. Njoroge, will address the press conference all the way through, and after that we shall be able to interact with questions and answers as usually do. Just as a reminder, please send your questions via Slido, SLIDO. The meeting ID is Mpc 05. And without further ado, I'd like to welcome the Governor of the Central Bank of Kenya, Dr.
Thank you very much, and good morning, colleagues. Good morning, ladies and gentlemen, wherever you are. This is the third briefing in 2021, and this is after the customary monetary policy committee meetings. In its deliberations yesterday, the MPC examined closely the developments in the context of the pandemic, which has been with us a little more than a year. However, for the most part, there was very little new macro data to slice and dice, as it were. And therefore, the MPC looked at, or had to make do, with the more granular and this reflects progress with respect to vaccines in the advanced economies and reopening of their economies. Crucially, this is the case in the US, the UK, and of course Europe. For instance, we know that UK citizens are now planning, and some have already gone on holidays, particularly in Portugal. We also have seen restart of travel, general travel, some business travel, but also the holiday travel, from those countries into specific destinations. The concern, though, remains in the advanced economies, remains policy missteps. That is, for instance, a lot of discussion now about the appropriateness of the accommodative monetary stance that has been sustained by the leading central banks. Also, a concern about the unevenness of vaccine globally. And for instance, as at end April 2021, less than 2% of the African population, or the population in Africa, had been vaccinated. And this is in contrast to over 40% of the population in the US and over 20% of the population in Europe had received at least one dose of the vaccine. So there's significant unevenness of the vaccine distribution, and there's been a lot of discussion about that. And it risks another wave of infections, perhaps even a new variant. So that is a huge concern that remains. Of course, more than that, there's the concern about the longer-term growth issues, or longer-term growth concerns in terms of the impact of the pandemic and the changes that we have seen over the last 1 year, and how those will be sustained in the context of the recovery as we move forward. Now, other things that are important to note is that the global supply chains have deteriorated, and there has been delays in deliveries, or there are concerns about delays in deliveries and increases in prices. The labor markets, particularly in the US, is quite tight, and there are concerns there about what is really causing that tightness and what is the solution for it, etc. So those are the things that, in a sense, dominate the conversation in the context of the global economy. Bottom line is that there are significant uncertainties even as the strengthening momentum continues. We expect an update. We expect an update of the global, let's say, the global economy from the IMF and indeed also the World Bank around mid-July, which is when they will customarily put out their updates, their WEU updates. Moving on now to the domestic economy, we'll begin with the external sector. The current account deficit as of, for the 12 months to April is estimated at 5.2% of GDP. And that is on the back of a rebound in exports, especially horticultures, with normalization of international demand and indeed sufficient cargo space. There is the slide that you're looking at now, which shows the general development of exports by category. And you can see that there has been significant improvement in horticultures and indeed other products. We'll talk about tea in a minute. But there has been stable performance, even as the number, as you can see, we had an export of 434 million US dollars relative to 459 in the 4 months in 2020, January to April. There has also been strong, let's say, resilient secondary income transfers with strong remittances. We'll talk about that in a minute. But drilling down, in the first 4 months, the exports grew overall by 5.5% compared to the same period in 2020. Horticultures, you can see they grew by 27.7%, driven mainly by strong performance in fruits and vegetables and a recovery in cut flowers. Our concern now with cut flowers is quite muted to the point that this time around we did not do the survey that we have been doing on the flower farms. But I want to talk a bit more about manufactures. Manufacture exports actually grew, as you can see, by 33.9%. And interestingly, there were some specific elements here that were strong. Non-metallic minerals, for instance, manufactures of metals, leather, all those subcomponents did very well. Now, there are some that actually fell, meaning they declined in value terms, and these include paper exports, exports of cork and wood, iron and steel as well. But on the whole, manufactured exports have strengthened, and as I said, grew by more than a third in the 4 months, January to April. Let's talk about tea exports. And you can see the volume of tea, and that chart is rather busy, but you can see the green, the dark green, that is 2019, and the deep blue is 2020, and then the yellow is, or the gold is 2021. And you can see that on tea, there has been a decline for the 4 months, that is relative to the 4 months in 2020. But that actually is because of the accelerated exports in 2020 that we saw. So looking at 2020, the blue, you can see there was a surge in April and somewhat also March, April of 2020. That is because importers of Kenyan tea, importers in the UK and Pakistan, those two jurisdictions, accelerated their imports, their purchases around the time of the onset of the pandemic last year. And that was obviously because of their concerns about potential impact. and potentially having disruptions in this sort of in the export chain, which didn't happen, but obviously at the time there were concerns. And you can see now we are now at, relative to the greens, that is in 2019, the growth has been significant. In particular, in April, 52 million kilograms versus 37 million kilograms in 2019. So that is expected to remain strong. There were concerns at one point about the potential disruptions because of the restructuring that is taking place in the tea industry. But that is something that I think has not been sustained by the facts, and clearly is something that has, well, the restructuring is happening, but it's something that is not impacting or affecting the specific flows of teas into the auctions, etc. Now let's talk about imports. Imports grew by 15.2%. I think the point to make here is that a lot of this consumer goods and also intermediate goods. Yes, this is the chart I was looking for, and you can see that the consumer goods, which is I guess the dark brown, has continued to grow. And indeed also the intermediate excluding fuels, that's the light blue. That obviously has implications on, is a leading indicator of what is happening in manufacturing. And as I say, that has been one of the things that we have been looking at quite carefully. I want to say something now about remittances, but this is also in passing. On remittances, this continued to be strong, and you can see the diaspora remittances in April was $300 million US, and that obviously is something that has been, well, it's an all-time record really, for the period January to April, relative to January to April 2020, the growth of remittances was 23.3%. This is an area, of course, of keen concern for us. It has been resilient during, or remittances have been resilient during 2020, during the pandemic, and has also been very helpful. It's not just the numbers in terms of whether the numbers come in or not. It has been helpful in terms of supporting families here in the country who have been recipients of the remittances. Finally, I want to say something about the official capital flows, and we expect that we'll be receiving some official capital flows, concessional financing, in particular from the World Bank. There's a program, should we say, a loan that the so-called the DPO of an amount of 750 million US that we expect over the next couple of weeks. And we also expect that the IMF will complete the review of the program, and that also is in, sometime in June, which will lead to a disbursement of something equivalent of 410 million US dollars. And also we expect to receive some amount from the African Development Bank, also supporting all the work that is going on in the COVID response, and should we say the recovery program post COVID, as it were. So all that we expect, which will support not only the budget in those areas, but also will support us in terms of the external resources that we need. So bottom line is we expect the current account deficit to to close at about 5.2% of GDP in 2021. And it will be fully financed, of course, and I've mentioned some of the flows that would completely finance this, but also we expect an increased level of reserves from the flows that I mentioned. Now I want to move ahead then to the real sector, and here, before going into the details, I want to say a word or two about statistics. Our view is that we want to be a data-driven institution, so decisions are based on data. And data is therefore very important. Now, we do know that the mandate for putting together a lot of this macro data is with the Kenya National Bureau of Statistics. And they've been doing this obviously for since they've been created, even before, in various guises that it has had before even before independence, really. And yes, they couldn't complete we were expecting to receive the Q4 data of 2020, and indeed all of the 2020, let's say the GDP numbers by sector, etc., all that in the context of the economic survey. But as you know, KNBS issued a press release or notice that they had been unable to meet that deadline because of the constraints that they had in their workflow. Some of those, of course, COVID-related, etc. And therefore, they will be putting together those numbers. And I think that is the reason why we could not revise our projections. And therefore, we chose to hold on to the projections that we had 2 months ago. And we will revise this as we get new data. However, all users, and us included, expect the numbers to pass the highest standard in terms of computation, methodology, and indeed practices. So it's true, we have had concerns before about some of the data that appeared to be at variance with the leading indicators that we have been looking at. So we would want those issues to be dealt with. Obviously, KNBS is the right is the right institution to deal with that, and to resolve, let's say, those incongruences that we have pointed out in the past. So that's all I want to say about statistics. But now I want to go and sort of point to some leading indicators that the MPC looked at carefully in determining their action and in assessing the developments in the economy. I will concentrate on 3 sectors. Not that there's a lot more information, but just for this discussion and for this presentation, I want to concentrate on 3 sectors. So the first, before getting to those sectors, suffices to say that agriculture remains strong. I just talked about tea. I talked about various exports on horticulture, etc. We can talk about milk deliveries. We can talk about other indicators, and those generally support a strong agriculture. Now, the growth of that will probably be moderated by developments going forward, but I think, like everything else, you cannot always, at times you are never sure what the final outcome is until, as they say, you have to wait until the end. There are concerns now which are probably more muted than they were before. Rain, is the rain a lot or little? Things like that. But I think on the whole, the expectation is that the sector and the data that we have looked at point to the sector remaining strong. But on the specific sectors that I wanted to discuss or to raise with you, the first of this is construction. And construction, basically, some of the leading indicators there, a strong leading indicator is the consumption of cement, which remains quite high. And basically, we have consumption of cement in the first 2 months, January and February. In January, it grew relative to the January a year before, 22.4%, and in February by 10.8%. Now, this is on the back, in part, of the development, or should we say the investments in government infrastructure. That is clear. Okay, so you have the chart on the board in terms of cement consumption. However, it isn't only government, and actually the private sector has also consumed, or the consumption of that has also increased dramatically in the private sector. And there is actually collaborating evidence. For instance, the credit to building and construction, that has remained strong. There has actually been growth over the last 4 months. Every month there has been growth of credit to this sector. So in some sense, the construction story, we've been making this point over the last, maybe even since June, because these numbers have actually been strong. But I want to suggest that it isn't only government infrastructure. And there are other areas, and we'll talk about some other indicators on this. I wanted to talk then about manufacturing, another sector that some of you have had concerns about. Now, credit to manufacturing has continued to grow. And in April it was 4%, it grew by 4%. That is relative to April a year ago. But actually, January, February, March, it was 12.6, 15.8, 10.7. These are large growth rates. So clearly there is something happening in manufacturing to support such credit growth. What about sales turnover? Sales turnover, manufacturing sector has also grown quite sharply. It was 8% in January growth relative to the year before, 10.6, 11.3. These are large growth rates. Sales turnover, which obviously is reported by the companies themselves. Import of intermediates, I think I showed you the slide, that also has grown quite strongly. Power consumption has increased significantly among the large and small commercial consumers. I'm not going to go through all the growth rates, but I think the point I'm making here is that the leading indicators are pointing to significant growth in those sectors, in the manufacturing sector. Now, there is the PMI, which is produced by one of the institutions in the country. That's the Purchasing Managers Index. And I would only say that this is probably the least, or maybe the most misquoted, misunderstood index, at least if you believe what you read in the newspapers. I will leave it as that. But the point is that it has been positive, meaning above 50, throughout. The last one was, I'm sorry. Yeah, it's true. In April, we had 42. In April, we had 42, which is less than 50, which means that the respondents were negative, had a negative, that the expectations relative to where they were was of a contraction in their processes, in the economy. But again, that is coming against the situation that was there then, which was the lockdown that we had. So everything else, March, February, all the way, have all been above 50. So we'd expect this to be above 50. Again, above 50, a PMI above 50 indicates that the respondents are more positive. So indication that the economy will be growing according to the expectation, relative to where they are, Okay, so manufacturing, I think the numbers, the leading indicators as I have mentioned. Then I want to say something about transport and communication and storage. Yes. First, in terms of sales turnover, this also has been strong. I think sales turnover in transport and storage. January, actually, there was a decline of 13.8, but then in February, it grew by 19.6, and in March, grew by 16.9. Again, large growth rates. But the ones that I think I wanted to mention is consumption of fuel. That has also increased. But I think moving on quickly, SGR throughput, meaning transportation of cargo, passengers and cargo through the SGR, that remains strong in January to February compared to the same period a year ago. So for instance, in terms of cargo haulage, in 2021, January, the growth was 19.7, and the growth in February was 55%. I mean, off the charts, as it were. I also have numbers about the containers, etc. But I think the point here is that you can see that there has been a lot of activity in the context of the SGR, increased activity in the context of SGR, which I think supports some sort of strengthening of the various other sectors in the economy. What is coming in is not just intermediate goods, it's also other goods, as I said, consumers, etc. Now, there is the statistics that I think we should also, I personally would really want to look at, which is the monthly cargo throughput through the port of Mombasa. But unfortunately, the data that we have is really dated. And so again, we are pointing to some areas where we can improve our data, which will obviously improve our decision making. One last sector that I want to mention is education. As you know, earlier in the period of the pandemic, there was a change in terms of how KNBS measured let's say the value add in this sector, education. And that was, as we understand it, necessitated by the reality of the people being at home, sort of students remaining at home for an extended period. But now we know that the students are back in school in all sorts of ways, and meaning at least this year, 2021. So we expect a normalization and the customary growth that would be there in terms of the value add that is ascribed to the sector education. That's all I wanted to say about the specific sectors in the real economy, or the real sector. Of course, there's a lot more that we could discuss, but I think the point here is that the leading indicators point to strengthening, gradual strengthening in 2021. But I think we will wait for all the correct data to come in, and then we will sort of make a more robust assessment looking at both the micro and the macro data. I want to say a few things then about the banking sector. I think the point to make here is as was indicated in the, there we go. As was indicated in the press release that we issued, first in terms of capital and liquidity, all those indicators remain okay. the sector is stable and resilient, at least as per those indicators. And the concerns or the risks that have not changed, the locus of those risks has not changed. And this, of course, relate to credit risk and operational risk. In terms of the NPLs, so talking now about credit risk, the ratio that we have been looking at is the gross NPLs relative as a share of gross loans, and that decreased from 14.5 to 14.2 in April. And this was really on the back of significant repayments and indeed also some write-offs in this sector, in this area. And the seven out of the 11 economic sectors that registered decreases in NPLs, that is in Kenya shillings terms, the top 4 were transport and communication, real estate, tourism and restaurant, and of course, and agriculture. The 2 sectors that that we flag for, or we see that there has been an increase in NPL. These are building and construction and mining and quarrying. Again, due to delayed payments, delayed payments to the agents in those sectors. So we will continue to monitor this and to monitor credit risk. And I think the point here is that it has been well identified, and the specific banks are dealing with those risks appropriately. In some sense, forewarned is forearmed. Now, the operational risks, I think, are there, and the significant one, of course, is related to COVID-19, and that has not changed. And in a sense, that has continued. And the various guidelines that we had issued, some of them, of course, underscoring what Minister of Health had indicated, remain in place until the COVID risks have abated. The other things we could discuss, but I think for the most part, the operational risks generally relate to COVID, also relate to cybersecurity concerns. After all, we are very digitized sort of economy. So that's all I want to say about the banking sector in the interest of time. On other matters, I think we had a robust discussion about fiscal, the fiscal developments, and as you know, the next budget will be presented to Parliament on June 10th, and against that backdrop, we had a discussion of developments, meaning the implementation of the budget, and indeed the expectation of how things will evolve in the last 2 months of the year, that is obviously May and June, and indeed at the beginning of next fiscal year. The point to make here also is that our staff in Central Bank and indeed the National Treasury have been quite diligent in terms of running the domestic borrowing program. And that, I think, has been, as I said last time, has been a major victory for both institutions and indeed for the country, because there has been a stable sort of development there in terms of lengthening of the maturity of the government borrowing, average time to maturity. There's also been a sort of clarity about the amount of borrowing and in a predictable fashion. Of course, some of you have seen that some of our offers were oversubscribed, but that is okay. That is okay. But I think the point here is we need to work so as to not have some sort of liquidity surges and going from feast to farming, you know. So no, we want to be more middle of the road. And on that basis, actually, the yield curve has been very stable and predictable, and you can see it there. And I think this has been one of the successes of a very difficult COVID year. I want to stop there in terms of the presentation, but I want to touch on a few things to close. And the first of this is just to say that we continue, well, to put out the, well, there's this proposal for the central bank to regulate the digital lenders, and I think one of you had asked about it last time. And the status of that is that the proposal, the bill, has been taken up. You know, last time the bill was being, let's say, proposed by the late Honorable Ro Oyoka, the former MP for Bunchare. I think it's Bunchare. I'm not sure if I'm pronouncing it correctly, but in any event, he passed away, and the matter has been taken over by Honorable Gladys Waga, who is a member of Parliament and the chair of the Finance and Planning Committee, and now it passed the first reading, and the bill has now been put out for public participation. Public participation closes tomorrow, and we expect that it will go in quick order through the second and third reading, upon which we will, at which time we will then, once it passes into law and becomes effective, we will take over that in terms of, let's say, applying it in quick order. We do understand the risks and, should we say, the pain that this bill intends to resolve. That's one thing I wanted to mention. You also know that we had the remittances survey that was running. It closed on May 17th. This was actually for the diaspora. So it closed on May 17th, and we are now putting together the answers, and hopefully in another 6 weeks or so, we will have the results that we can circulate publicly to you. Finally, there has also been a lot of documents that we have published recently, including the annual banking supervision, the annual bank supervision report. I think that's what it's called. I'm maybe getting it wrong, which we published yesterday. And also there's an innovation survey of the banking sector innovation that we also published yesterday. But there's been other documents like the survey on credit officers about a month ago, and several other documents. I did not mention in this presentation the 3 surveys that we did for the MPC, but we will publish them. Hopefully, well, I don't think it will happen this week, but by the 31st, Monday next week, we hope we'll put it out on our website, all 3 of them. So I didn't mention anything about it. We can discuss if you have specific questions, but I think there's a lot of granular data or granular information, as I mentioned, that is in there or buried in there that you can dig up. I think that's what I want to say now, and I'll stop for questions. Thank you.
Thank you very much. That was the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge, giving his statement after the MPC. So, as is usual, there are questions that have come through from you in the media and also analysts. And to begin with, 3 questions. The first question is from David Herbling. David Herbling asks from Bloomberg News, is Kenya keen on getting an extension of the DSSI debt relief? And if so, how much in savings would Kenya make by delaying payments? The second question is from Kefa Moirore of Radio Citizen. And Kefa asks, private sector credit growth collapsed in April. We have seen bank loans shrink in the first quarter. Is the CBK concerned about constrained lending despite supportive policies? The third one in this batch is again from David Habling of Bloomberg. How much does Kenya expect to receive from the Africa Development Bank for post-COVID-19 recovery, and when is this expected?
Okay, thank you very much. So taking the three questions, first, the interest, Kenya's interest in extension of DSSI debt relief, the answer of course is yes. Why? Because it will free resources that can be used for other purposes, and in particular the recovery or supporting the economic recovery program, that is post-COVID recovery program. So that is clear. And the question again is the extension. You're asking the details about how much would be saved by so doing. Obviously, this depends on the duration of the extension. If it is 6 months, if it is 3 months, if it is a year, I mean, obviously the devil is in the details. So I cannot make a pronouncement on that without specific data. The question about the African Development Bank, I don't have I have the numbers somewhere, but I don't, well, I'll see if I can reach them quickly if they're in this batch. That is about how much do we expect to receive from the African Development Bank. But I think the point also is these questions will be put out in the context of, actually, they are there in the budget. Look at Supplementary 1. Look at Supplementary 1. I think that is quite explicit. Actually, that's the better answer. Look at Supplementary 1. It is on the National Treasury's website, and all the numbers in terms of supporting the budget are there. Not only are they public, but they have been presented to Parliament that has sanctioned them, etc. Private sector credit collapsed in April. I don't know if the term I would use is collapsed. I think it grew, maybe at a slower pace, 6% as opposed to the 9s that we had before. So I don't think, Kefa, I think the word collapsed is, it is like I say, okay, you collapsed. I mean, I presume you haven't collapsed yet, you know. But I think you understand my point. So collapse is dramatic, but it is wrong. It gives the wrong impression. So it came down to 6. So the growth rate has fallen, if that's the word you want to say, has reduced to 6%. But I think the point is understand what happened in April. April, we all were under the constrained environment of the containment measures, and in particular, the 6 counties, right? The 6 counties that were under lockdown. Obviously, it was not as severe as the lockdown that we had previously, the first lockdown. At least the economies were still, I mean, a lot of economic activity was still taking place. We came to the office, matatus were working, fine. You couldn't go across border, etc. But for the most part, the economies were it's true. You had some sectors like the restaurants that were much more constrained, were not allowed to work as freely. But I think in that context, that's why growth rate came down. As a matter of fact, in the press release, we talked about the applications have gone up again. I think there's a paragraph there that mentions precisely that. I didn't want to read it to you, but yes. Yeah, the second last bullet, it says, the number of loan applications picked up in May following a dip in April. So we have the specific numbers. So I think the point here is not so much the constrained lending policies. It was the constrained environment that we were in that actually created less certainty in terms of businesses and business operations, and hence the decline in the dip in the applications. After reopening, of course, things have changed, and that's why we had that sentence in the press release. Yes, that covers them.
Thank you, Governor. Another set of questions. We shall begin with Churchill Ogutu from Genghis Capital. Churchill asks, can the Governor expound on the strengthening, and he quotes, strengthening of the monetary policy framework, one of the 4 objectives of the new IMF program? Franklin Sunday from The Standard asks, what is the position of the CBK on the liquidity challenges currently facing Spire Bank? And finally, one additional one from Kefa Moirori from Radio Citizen. What does the Governor see as a true prospects for growth in 2021, given the swings, and he illustrates the cycle of reopening, reimposition of restrictions, and back to easing of these restrictions?
Okay, fine. In order of the this question, taking them one after the other. Strengthening of the monetary policy framework. Basically, what this is about is we have seen the evolution of our monetary framework in terms of, let's say, the objectives haven't changed. The objectives of monetary policy, they will not change. They remain the same, first and foremost, price stability, but also concerns about financial stability, and then also concerns about strengthening of the economy, etc. So all those are part of our mandate, and those will not change. The issue is more than that, the tools that you use. So what tools do you use? What methods do you have of assessing how things are going to evolve? And this is really the issue. This is what is at the heart of the framework. So what are the indicators that we look at? In a sense, this also means some, let's say, modeling, strengthening the modeling. The economies have changed. The economy changes, and therefore the modeling will also have to change to keep up with the restructuring of various things that we see in the economy. Thirdly, also things related to the, let's say, the tools. Now, for instance, we rely heavily on the CBR, right? The central bank rate. But is that, and by how much? Is that what we'll need to continue looking at, and by how much, right? So I think that is what is the best signal. We have seen structural changes in our economy, as you know. For instance, there's a lot more digitalization. So the transmission of, let's say, an impulse, monetary policy impulse, has changed, and we need to keep up with that. So that's really the remit of this sort of strengthening of the monetary policy framework. Now, if you are thinking that we are going to change our monetary framework and begin thinking about, well, let's say like the advanced economies, and begin thinking about the the sort of asset purchases and things like that, that is far from what is in our mind. We are unconventional monetary policy. We are not there. That is not what we have in mind, and we have more in mind tightening what we have today, making it sharper, making it sort of fit for purpose. And I think all of us understand that whatever sport you are in, whatever you do, you always improve. You always improve. And you cannot sort of accept that there's no improvement that is possible. So that is basically the objective. This has always been our objective all along, and we have been working on it for quite some time. So to claim that it is an IMF, is an objective of the IMF program, well, we just threw it in there. That we said, and that we are committing to do this, which we had committed long before. So It's not because the IMF is telling us. On the contrary, we know we know where we are going, and we will stick to that. Position of the CBK. I think this is not different from any other bank. Any bank that is facing liquidity challenges has at its disposal all sorts of tools. Of course, it depends on also the source of the liquidity challenges. And they are the usual tools in terms of going into the market and getting liquidity from other institutions. That is why you have a very, let's say, active interbank market. And also you have, in case of emergencies, maybe they can, because they cannot, let's say, adhere to the CRR, then of course the emergency windows in the context of the IMF, in the context of the CBK. So the central bank, after all, is the lender of last resort in some of those extreme cases, if indeed it gets to that. So I don't think there's anything different in a particular institution. What is different about it, if you are to think of it in that context, is just the specifics, the name, but the problems are always the same. More generally, and you should accept this, more generally, there has been a strengthening in the banking sector in terms of their business models, which really should be at the heart of every solution. Strengthen your business models so that these sort of problems do not recur, for resilience. And this is why we had mentioned some time ago that we had embarked on this new normal, where they needed to adopt better, they had to improve their business models so as to become more resilient. So I think that's really the thrust of the answer as to what we need to do with this or any other bank, regardless of whether they are facing liquidity challenges or whatever else it is. Last one is on true prospects. I'm not sure what true prospects means for growth in 2021. I guess the only point I would make on this, different from what I've mentioned just now in my presentation, is it's true we don't know what will happen. There's always that, we are in this very highly uncertain world where we don't know if there will be another wave. We are monitoring, for instance, all of us, I'm sure you included, we are monitoring the rate of positivity. Now that's terrible English, but anyway, for what it is worth, positivity rate. We know that it needs to stabilize below 5%. And that would indicate that, let's say, it would be in the jargon I used last time, that would be the branch in the olive's beak, the other way around, the olive branch in the beak of the bird that Noah let out of the ark, right? So meaning it would be an indicator that actually there's victory versus in the fight of against COVID. So the point I'm making here is that we don't know if there'll be a resurgence. So we have to project, we have to make our own assumptions, but understanding that the outcomes are highly uncertain. So uncertainty is really the order of the day.
The last question, Governor, comes from Razia Khan. Razia is from Standard Chartered. She asks, the economic recovery is underway. External financing needs look to be comfortably met. What then is the biggest concern for the MPC at this point?
Okay, so I think the big thing is still remains the health issue. So that is important. At the end, and in a sense, it relates to the question that I just answered. So the prospects of the economy are tied, and indeed our livelihoods are completely tied to success in the fight against COVID. That, I think, is very important. So no matter what we do, all of us, I mean, that's why we wear our masks, even that's why we sanitize our hands, etc. So all of us, we have to be concerned about that. It's true, maybe this is not, the MPC doesn't have a view about whether the masks should be done in this way, whatever. That is not the point. The details, of course, are left to the specific entity, in this case, Ministry of Health. The issue about vaccines, that the vaccine program is accelerated and is successful. All those are important underpinnings for the economy to bounce back better. So I think that remains the highest concern of the MPC, and it has to remain the highest concern of anyone who is a policymaker, anywhere in the world. That's what it is. Now, we all come to it differently. I know, for instance, now there's a lot of discussion in the international fora about distribution of COVID vaccines. To deal with the issue I raised at the beginning, this sort of unevenness across the globe. And also financing in terms of SDR location, etc. So that's one whole set of issues that obviously land on the specific, or the people responsible for those dockets. In terms of other things, you're right, the external financing is comfortable. There's no real concern there. But I think the issue will remain liquidity management. And so that is something that relates more to fiscal, how the government spends, and the timing of that, and our sort of, let's say, working in sync, in tandem, to withdraw excess liquidity and indeed to inject liquidity in case of in case of a need for additional liquidity. That is a general problem that I think we have been facing for some time. But I think it is, I guess, the success, as I mentioned, of the borrowing program that we have been having, domestic borrowing program, can kind of maybe suggest that that has been a simple problem to resolve. It's actually quite complicated, as you well know. So I think the point here is that is where the biggest issues are, and the success of the fiscal measures that are in place, because those also will tend to, let's say, reinforce the positive elements that are coming out. If those are not successful, then of course we will be in much, let's say, unsafe waters. So those are the general concerns of the MPC.
All right, thank you very much. That brings us neatly to the end of this month's press conference. As is usual, the MPC holds its meetings every 2 months. But as we say in the press conference, in the press release, if there's need to have one any earlier than that, it usually happens. We thank you for joining us, and we hope to see you at the next one.